Hey, what's up? This is Magda from Crypto Masters. Hope you're not crying too hard over the bearish tendencies of Bitcoin and other cryptocurrencies over the last few days. Obviously, I'm not your therapist. I'm just going to depress you even further. And in the next 3 videos, I'm going to give you 3 reasons for why Andreas Antonopoulos thinks that ETFs are not a good idea for Bitcoin. Stay tuned. So we're all dead excited about the Bitcoin ETF, all those big institutional players entering the scene, the mainstream fully embracing cryptocurrency, finally regulation allowing widespread mass adoption, not to mention the price of Bitcoin hitting all-time highs, and all those loyalty awards for those that hodled through the bad times. Like, sure, a Bitcoin ETF will change a lot. But are you certain that you've not lost sight of the bigger picture? Andreas Antonopoulos thinks that we kind of have. He thinks that an ETF will mean financial gains for the traders. But an important question that many seem to have forgotten to ask is a Bitcoin ETF in line with what Bitcoin actually stands for? Well, Andreas Antonopoulos reckons that a Bitcoin ETF is inevitable, but will cause more harm than good in the long run. His main argument is that an ETF is a fund that has a custodian or a manager or, whatever, a third party, call it as you will. So it's got a custodian who creates a financial instrument that can be traded like a stock, but it isn't actually a stock. Now, while he agrees that an ETF approval would open the gates to institutional money and at the same time increase adoption, he warns that this could be a double-edged sword. So the main problems are the loss of power and control that are bound to happen when a third party enters the scene. Wasn't this meant to be a peer-to-peer network? Yeah, some degree of control is inevitably the result of adoption. And it might also be argued that the dilution of power is also inevitable. So let's think about this. What is the essence of Bitcoin? Why is it so damn revolutionary? Why is it going to change the monetary system as we know it? It boils down to 3 factors: control, trust, and neutrality, all of which would need to be compromised when it comes to the introduction of Bitcoin ETFs. This video is about how control over our money, over our Bitcoin, is going to be compromised as an inevitable consequence of ETF approvals. So let's think about it. Let's think about how Bitcoin and the introduction of cryptocurrencies revolutionized control. It's all about the control of your money, right? Bitcoin takes the control away from the banks and gives it to you. So for the first time, you actually control your money. Some folks might say that, oh, but what about when we had barter? We could decide about how many chickens we wanted to have and how many eggs we would have to exchange for half a cow or whatever. Yeah, we kind of did have control over this when we exchanged things, but that wasn't money, was it? That wasn't fiat. And thanks to cryptocurrencies and Bitcoin in particular, you control your money. You have complete authority over your Bitcoin, and no one can decide that, hey, they're running low on money. Let's say like the government of Cyprus, they kind of did this. Oh shit, we're running low on money, so we're going to take a % from your account. With Bitcoin, no one can freeze your transaction if they decide they don't like what you want to buy. And truth be told, you don't exactly need to be a nuclear rocket scientist to be able to control your money when you have cryptocurrencies, because you get all of this control just 5 minutes after you download an application. Now, how does a Bitcoin ETF change the amount of control you have over your money? Does a Bitcoin ETF actually ensure that investors have control over their money at all? Well, not really. They only get a share of the actual funds. They don't have or own their private keys. And guess who owns them? Guess who kind of keeps them all stored away? Yep, it's the ETF custodians. Because that's what all issues with controlling money boil down to: custody. Who usually has custody of your money? It's the banks, obviously. But with cryptocurrencies such as Bitcoin, we've managed to throw off the shackles of their control, of the banks and financial institutions controlling our money, and we ourselves controlled our Bitcoin for a while. So custody with Bitcoin ownership is plain and simple. You either have the private key or you don't. And with a Bitcoin ETF, well, the circle kind of does a 360 and we're back to square one, because we need financial institutions like banks to once again hold custody over our money. You know, ETF investors won't hold their own Bitcoin, just an IOU. So if you buy something via this platform, you only have an IOU. So you're not getting full Bitcoin ownership right. And all you're getting is a superficial access to price speculation and potential profits from this. It's like you become an inferior or second-class Bitcoin user. You never actually own Bitcoin. So you never actually become a Bitcoin owner. You don't get an opportunity to vote. You can't take part in discussions on governance. You wouldn't be able to pick up forked coins like when the Bitcoin Cash fork happened. So we're looking at large ETF custodians who sure give investors a tradable share, but don't give them the rights that come part and parcel of being a Bitcoin private key holder. So loads of private and institutional investors will enter the scene because maybe they didn't want to go through all the barriers of getting to know the technical language or infrastructure necessary to be able to transfer funds and keep them safe. But it really feels like taking a step back to fiat terms and conditions with drastic limitations on how much control you actually have over your Bitcoin. And what if there is a fork debate? Who has control and the decision-making power? Well, it isn't the investors who bought Bitcoin in the form of shares on an ETF, that's for sure. It is the actual ETF fund managers. Antonopoulos gives the first fork as an example, the user-activated soft fork scaling debate. You know, Bitcoin Cash, Bitcoin Unlimited, Bitcoin XT. So you had the scaling debate and you had all those coins and all the various clients that supported each of those coins. Large custodial exchanges had a huge influence in the ecosystem. They could support or not support a fork on behalf of their customers. So basically the moving opinion based on a large amount of currency was the main deciding factor. And that's very analogical to what an ETF will do, but on a much broader scale. Similarly to the large custodial services, it will give the centralized ETF managers a voice and not the investors. They won't have anything to say in the consensus and governance of Bitcoins. And worst case scenario, fund managers will be given the majority of the voice in the ecosystem, considering the large amounts of Bitcoin they will be holding. So should debates occur, and they will, large custodial holders will have disproportionately more influence over the debate outcome. So how do you think we can both have the cake and eat it? How can we open the gates to institutional money without losing control over our own money? Well, if you have any suggestions, then let me know in the comments below, and make sure to subscribe so you don't miss out on the next video about the other reasons why a Bitcoin ETF will compromise what Bitcoin is meant to stand for. Thanks a lot for listening and have a great day.